day. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Monday, December 7th, 2020, about 6:50 p.m. Central Time. Want to thank all our vets who served for us. Today is Pearl Harbor Day. A lot of those men aren't with us anymore. I know everyone I knew is not here, but thank you. And of course, think about it. We fought Japan. Now they're one of our closest allies. We're very close with the country. It's great, isn't it? It's sad that we went to war, of course. All right, let's talk about what we have facing us. You know, you're fighting right now getting a 1-week extension to the general budget so we don't close the government down, and then trying to get the COVID relief bill before Congress scoots for their vacation, leaving everybody high and dry. It appears that the Republicans are settling in. Maybe they'll get to that $908 billion deal, but I doubt they'll do it unless the House agrees to that clause about not suing small businesses for COVID issues. They want us to keep, you know, I can only imagine think about asbestos. Doesn't stop on TV. Zantac, join the lawsuit. This one, can you imagine with COVID-19? I get what we have to do. This was a pandemic, and there are relief measures that are probably needed. I think everybody's got to give something if they want it. But let me give you the real bad news. If you do a $908 billion deal, do you honestly think you're going to get through the Senate after this deal, another deal, especially with vaccines coming about? Don't you think the Senate's going to say, if they stay in Republican control, you know, I want to see the impact of those vaccines before we go spending a lot more money. This is probably the shot to get this deal done, but I would bet hard that that will be a one-shot deal if Republican control of the Senate stays in place. Okay, that's what I think there. Now we have this week coming up the European Central Bank, a host of other banks with their monetary policies. Chile's came out today. You've got a lot of them coming out. So sit down, relax about those. Next week the U.S. comes out with our Federal Reserve. What are they going to say as this COVID has gotten even worse than anybody thought? And if you're listening to the news, they are telling you it's going to get worse than this. Hospitals are running out of space. Where are you going to put all these people? And we still don't have the vaccine out. Now, the good news is the UK is going to start their shots as early tomorrow or Wednesday. So we'll see the reaction that people get if they take them. Let's hope it's good. By reaction, I mean physical reaction. All right. As you can see, and I'm staying with PAVE because this is an infrastructure play. This is different than a COVID-19 relief play. This is possibly something to get Americans back to work, different with infrastructure of highways, bridges, blah, blah, blah. In any case, the pattern is still higher lows, higher highs, looking still bullish. The market is over the 18-day moving average of closes. That's bullish. Now, what I'm looking at, it'll happen probably tomorrow. Why? Before I even say what it is. If you take a look at the red numbers, they're changing 8 to 10 points a day. Do you see that? So with the market at 2022 and the last swing line low at 2034, that's going to be very shortly where the major support of the market is against that last break low and that number. Where's the resistance? Haven't quite hit it. That's the upper Bollinger Band. You've gotten to points, consolidated, tried another rally, backing off a little bit one more time here, and momentum in the market is overbought. Now, to embed, you have to get both numbers over 80 for 3 days in a row. You certainly have it today. Did you get it on Friday? Both numbers over 80, I can tell you they're not that way the day before. And just tell how they come up together. That's experience. So you need to get through that tomorrow to say, okay, we've converted from overbought to embedded, but you haven't done it yet. So you're in an overbought market where traders are leery until something else happens. In SMH, this is the embedded reading when it locks in, and this is called riding that upper Bollinger Band. Very classic. Here you had it. You don't always ride that way, but when you get it, you typically do get a move up. And when it loses the reading, you get these corrections. So when you lose it, I'll look for the correction. haven't lost it, which tells me the pros are looking to be buyers in this market on the pullback still. In the industrial sector, Spider, when you lost the embedded reading, and let me just show this to you right here. Come on. That changed the pattern of the chart. I'm looking for price in the 18-day average then to come together unless it re-embeds, which it doesn't do. And it still hasn't done it, but I'm still looking for that to come together. We'll see if I get right or wrong on that. Take out this high up here, and I'm not right in my thought process. By the way, I'm going to be teaching this in a special video series, but it's going to be a paid-for video series. There'll be two prices. If you took my charting course in the past, you pay a lower price, even if you get the charting course for free, if you took it. If you never have taken it, you're going to pay a higher price. You don't have to look at the video series. That's up to you. But I think what I know about this is different than most, and I'm going to do the same on slow stochastics, and then one that I see the plays on outside days, how important they are. So I've got a whole video series coming up that you're going to want to hear about. I'll release them in early 2021. That's only, folks, 3.5 weeks away. And I'll let you know when they're going to be ready. I have yet to do them. I'm formulating them in my head right now. But once I formulate them, it's easy for me to shoot them. And remember, any one-year subscription to any of my research products that you buy during this period, you get the free charting course. The free charting course entitles you then special pricing on other things. And so does a paid charting course, obviously. XLE, overbought. Nah, I don't think you do too much up here. COVID's weighing on demand for energy. You know that, I know that. Miss Merkel in Germany's talking that they might have to extend their problems. It's gotten a little bit better in France, I'm reading, in Italy and Spain. But a little better just means plateauing. It doesn't mean they won't get another surge. They're typically 3 weeks ahead of us, and they didn't have Thanksgiving. Here's their dilemma. 3 weeks from now, they get Christmas. People go visiting, and they're not going to have vaccines. Their numbers are going back up after that. In QQQ, embedded reading, still very bullish. Today, this market jumped nicely. Why? Because with the COVID we're seeing, the demand that some might have thought would wane for the subscription TVs, for the FANG stocks. Nah, cloud computing, no. This keeps people at home. I know Chicago, pretty close to a lockdown. LA, imagine living there, down to San Diego, they are locked in. Then we get over to the emerging markets. We're starting to get a bit of a correction. How deep this goes will be interesting tomorrow. The 70-66 level could be where this market finds excellent support. I'll be watching that very, very carefully to see what it does there. I think you're close enough to the upper Bollinger Band to have problems on the upside. In the gold market, you negated the downtrend, and I pointed this out to you right through here. This day. This was last Wednesday. And now puts in target the possibility, the word is possibility, of getting to the up 18-day average because you lost the embedded reading. Here's the market. This was Thursday, this is Friday, and today. If you keep going, and I have my doubts about it, but if the market were to keep the rally, pretty strong resistance up at 179.46. I think it needs to now figure out what it wants to do next. The gold miners are a better looking chart. Now they're in an uptrend. You have higher lows, higher highs. Pullbacks should find support between the 18 and 200-day average. The number that I would think that the pros don't want to see taken out is 35.06. I would expect to see buying on breaks into that area. Target could be the 38.40 area. TLT, short covering zone, in my opinion, getting your bounce. Now we got to see what these banks want to do, the COVID impact. And then the relief bill. Hard to say. Trend down, but too oversold to want to pursue anything. And in the euro, as I look at the market, higher lows, higher highs. But how many days were we over the upper Bollinger Band? 3 days, and I told you for Friday you had a 2% chance of staying over the band. You pulled back under it on the end, and now you're back here. You're losing momentum on the upside, but haven't turned the slow stochastic down. This market still gets support, I think, in that 113 area. The key is not to lose the embedded reading. Remember what I was saying. Any of my 1-year subscription packages, if you're a SPDR ETF person and you want to buy a 1-year package, about $159 for the morning videos, I will give you the charting course for free with the charting software, the other research, all that goes with it, the phone application apps that work on your Android and or your iPhone, everything else, free attendance into the webinars, free viewing of the special reports I put out. It's quite a deal. And of course, the charting course itself, $199.95 value. How do you get it? Just go there, sign up for it. This isn't going to stay lasting that long. It's my Cyber Special. I waited for everybody's Black Monday, Cyber Monday to get out of the way, and we had phenomenal sales over the weekend. It's something for you all to look at. Even if you're a monthly subscriber, this could be where you convert yourself. We'll honor that as well. I'm Ira. Have a great day, all. I will see you tomorrow.